So what I want to teach you in today's video when it comes to gold, silver, and also the stock market is what's really going on right now, but not in a perspective of just giving you an update. Okay, I want to give you some tools that's really helped me when it comes to my trading. This quote that you're seeing right now from Charles Dow, but also I've been a very big student of W.D. Gann. Okay, in the past, and he's understanding just some techniques that I've learned from W.D. Gann has been really amazing. Now I haven't learned from him directly. Now, I have done a lot of stuff learning from W.D. Gann, but my mentor, who I've been with for over 10 years, he's been trading for 30 years now, and I really have learned a lot of stuff from him to understand these markets on a deepest level. And that's what I want to walk you through today. But this sort of screenshot here from Charles Dow really sort of emphasizes what I'm all about when it comes to my personal trading, the way that I like to trade. And so here, the price discounts everything. So for example, this one here, one of the biggest mistakes that I see that a lot of traders make, and I'm going to get to the actual charts here. I'm going to get to the GDX. I'm going to get to the actual stock market. I'm going to get to silver and gold as well too, and all that sort of stuff. But I'm going to teach you techniques that you can understand about, okay, this is what's going on right now, and this is what's likely to come, okay? And not only from this perspective here, but any market out there, you can start to get a much better opportunity of, oh, this is how I understand, or this is how I read the market. And it's not a matter of, oh, well, for example, like right now, as I'm doing this recording for you, you would know that the stock market had what? The stock market had a bit of a drop just recently. There's the S&P, right? We know also the NASDAQ had a 2% down day as well too. You know, so there was a bit of a big drop, or a drop coming in the stock market. Now, you would know over the last week or so, I've been putting videos out on YouTube. If you've been following me even for the last few weeks, and I've been put even thumbnails saying there's a drop coming. Now, how did I get that? How did I get that right? Now, it's not about getting it right. It's just understanding the rhythm of these markets when it comes to a few really simple techniques of how these markets work. So you can start to really understand these markets on a deepest level to really help you and coach you and guide you down making good decisions in the markets, because that's what it's all about. And once we understand these markets on a deepest level, we can really start to give us the best chances of succeeding in this thing called the financial market. So if I go back to this screenshot here, the price discounts everything. So if you're, the one thing that you'll be able to, one thing that you've learned here, right, is that just because we get good news, say we get a rate cut, good news, doesn't mean the market's not going to go down. Just because we get good news, right, record earnings of a company doesn't mean the stock can't go down. I'll give you an example, actually. I remember this very, very clearly back here with Tesla. And where was it? I remember this back many years ago, and it was really just highlighted the big thing about trading based off earnings and all that sort of it. So you see this move up here, okay? So this right here, as you can see, so that point right there, see this point right here, see that gap right there? That gap there was earnings. Now, why did it gap up? It gapped up because Tesla at that time had a really big record-breaking earnings. Revenue, growth, sales, you name it, right? They started to have a really big growth to the upside. But the market then faltered at this time, and then actually had, at that time, it actually had a 45% drop after a record-breaking earnings. Now, why am I mentioning this to you? I mention this to you because if you're trading based, if your whole thing is about trading, right? Now, that's what I'm about. I'm about trading the markets. Now, I do have long-term projections of these markets over the next 5 years, but my whole thing is, my whole thing for the last 20 years of my trading career has been, how do I generate a good income this year, right? Or how do I generate a good return this year so I can make a lot of money this year so I don't have to work, so I can pay my bills and live my life. That's what my whole focus has always been about since day one. Why? Because back 20 years ago, my whole thing was, I didn't care about 5 years. I just want to learn how to make money now so I don't have to work, so I can have freedom. That was the number one thing for me. right? And then I've been on a very big, long journey from there. If you'd like to learn more about my journey and my story, I'm running a webinar today. That should be that first link in the description. Or if you go to johnsfreetraining.com, you can join my next webinar I'm running. And on that webinar, I'll talk to you more about my story and how I was $250,000 in debt and what got me out. I'll teach you my trading strategy and all that sort of stuff. So you want to learn all that sort of stuff, guys, I'm not going to go into this video here, but the first link in the description, or if you go to johnsfreetraining.com, you can join my next webinar, and I'll teach you on my webinar all the details about what I did to actually go from $250,000 in debt to then making money. I'll teach you my trading system as well too. I'll teach you how I scan the markets and so much more on that webinar there. So the reason why I'm saying this here is because one thing that I've learned is that we cannot try to trade this year, or if your goal is to be in trading opportunities. Now, what is a trading opportunity? A trading opportunity is anywhere from a short-term trade, right? Could be like a scalping position, or a swing trade. What is a swing trade for me? That's what I'm a swing trader. The reason why I'm a swing trader, because that's the best form of trading that you can actually apply to your trading to actually have a good year, to give yourself having a good year. Why? Because swing trading allows me to be in a position for 1, 2, 3 months, generate a really big return over that 3 months so I can have big profits and small losses. This is the only way that I've been able to generate really good returns year after year after year from doing this here. Does that make sense? And especially this year here, trying to get in and get out really quickly on a more of a scalping basis has just been destroying traders because of the volatility through these markets. And you probably know what I'm talking about here. So I want to go back to this screenshot here. It says price discounts everything. So the more we can actually read the price, the better of a trader we can be. And I'm going to walk you through some simple things when it comes to understanding the different phases of what I've learned from WD Gann in this here. And so you can understand, okay, now we're getting ready for, very, very soon, we're getting ready for this type of phase, or we're getting ready for this type of phase. Are we getting ready for an acceleration phase, meaning we're likely to have a good move? Or is it the wrong time to get involved with it because we're likely to go through a bit of a quiet phase or a pullback phase or what's called a time phase when it comes to WD Gann, right? So here, when it comes to Charlesdale, the market has 3 trends. Major trends have 3 phases, right? And so if you look at this here, one thing I've learned, this is not 100% set in stone all the time. But if I bring up, say, a blank chart like this here, and I bring up, say, let's bring up the Dow Jones, or any market through here, right? Let's just bring up the Dow Jones, and I'm going to bring up the Dow Jones here from a weekly chart here. Now, one thing that, let me actually bring up. I'm trying to show you a much better example. All right, so let's do this here. So again, this is not 100% set in stone, but it's an average. And now the average here, the market has 3 trends. And now the 3 trends are either up, down, or sideways, right? Now major trends have 3 phases. What does that mean? In particular, major trends typically have 3 different phases before that trend has come to an end. Now, what does that mean? That means if the market has 1, 2, 3, it's like 3 major stair steps, and then we end up going through one of these type of guys, right? Where we start each trend has 3 phases. 3 phases is like what I've found is on average, again guys, this is not 100%, but on average, it's 3 major stair steps in the markets, right? So we had this here, we had stair step 1, stair step 2, and then we also had a 3rd stair step here, as you can see. So it was breaking out 1, 2, 3, and then it came up, and then guess what? And then we had the big drop, and now we're going back up again, right? And now we're probably going to come back down again because we're going to go through the different phases. So step 1, I want to sort of break this down step by step by step here, okay, for you, so you can understand this. Because I promise you, when you start to understand this, it really starts a game changer around the way that you're viewing and understanding these markets on a deepest level. And everything can start to change for you if you understand this. So the first thing here is major trends have 3 phases. The averages must confirm each other, right? Volume must confirm the trend. That simply means that when we start to get the breakouts, we should start to see an increase in volume, right? Now, here's a really big thing here. And this is for people that are trading all markets out there, right? A trend is assumed to be in effect until it gives a definite signal that it has reversed. What does that mean? Okay, that means this here. So for my last video on this YouTube channel was about silver. And one of the things I was talking about when it comes to silver was this. I said the market has a definite signal that it has reversed is this. When the market goes up, higher low. In an upward trend, we have these higher lows, right? So a definite signal is that when it gives an either one, a breaking of the low. So we can make these higher lows here, which means the market drops a little bit to give the higher low, then we go back up. Then the market drops again to create the higher low and then go back up. The market drops again. So in the stock market, for example, the market's dropping right now. It doesn't mean the top's in. I believe that this correction we're seeing right now in the stock market is just making the trend, right? Because the market has to go down for a little bit. For what? It has to, this higher lows is upward trend, right? So it has to go down a little bit to create the higher low. That's all that's happening in the stock market right now, right? Which simply means, by the way, because they've gone up so much on the stock market, we're probably going to have probably a few months of not much going on, probably weakness. Anyway, so this one here, to give a definite signal. A definite signal is if the higher lows are the most important part to an upward trend. If the market breaks this low here, the trend is now over. And if it gives a definite signal now is a new trend on the downside is when the market comes up, goes a lower high, and then starts this here. When you start to get this action here, this is when you end up starting to get a new trend in place. So until this one here, until it gives a definite signal that it has reversed. Okay, so the first thing there is that, as you can see, that this is what's happening here. So if you look at any market out there, and this is where when you start to look at, say, and one of the big trends that I'm always focusing on is the weekly charts. Always the weekly charts. And as you can see, every time through this gold blank chart here is what? Every time, look at this here. Low, higher low, higher low, higher low, and we're still developing higher lows. Make sense? So no, gold's not over yet. Now we are getting towards the end of this gold move. Why? Because look at this here. Major trends have three phases, three major stair steps. So this here, if this was the sideways movement through here, then we could have 1, 2, there may be one more stair step in the markets. And that means this last move is probably going to be a blow off top move. And then we start to see something like that going on. So that this may be that one more last leg coming out of it after breaking out of this level from here. Makes sense? And so if we go to the end of the stock market here, right? So if I go to, again, the S&P, if I squeeze my S&P chart up, you can see here that whenever we go through, we end up going through these. And what I've found is that the market will go stair step 1, stair step 2, stair step 3, and then I'll have a good correction for a while. And then it'll start stair step 1, stair step 2, stair step 3, right? These are big swings here. So we have, right, stair step 1, stair step 2, stair step 3. Again, it's not 100%. It's not 100% there, meaning it's not always sometimes you can get 5 or 6 stair steps, right? But you know, if you start to get more than 3 stair steps, you're getting towards the end of that big move before we go through one of these phases again. And then we start to break out. And then we go 1, 2, third stair step, and then we start to go through a really big drop, and now we're going up through to here, right? So the market goes through these different what's called trending phases, these different phases through here. So whenever I'm doing that in the markets, I'm always analyzing if that's true. I'm always analyzing if that's the 3 major stair steps, and I'm looking at the market. Every bull market has generally 3 major stair steps, right? So again, if we look at the NASDAQ as well too, the NASDAQ did what? Look at this here. 1, roughly around 2, and then 3. As you can see, 3 major sort of breakdown periods. And then we broke down 1, 2, 3, that third stair step, and then we broke down. See that through there? So we go through these sort of nothing going on periods, and we start the stair step, and then we break down, nothing going on period, 1, 2, 3, and then we go through one of these phases here. Now, depending on how volatile, one thing I've learned from WD Gann is that if it's slow in price, meaning these phases through here, and if I use gold as an example, gold is a really good example of what's happening here. What happens in the markets I've found when it comes to these phases through here, right? These is what's called time phases. The market goes through time phases and price phases. Now let me explain something to you here. Market is based off price and time, right? And if you study anything about WD Gann, you will be able to see what's called price and time phases. Now, these price and time phases, to simplify it, I've called them energy phases. And as you can see here, the market goes through these different phases in the markets. Okay, so we have, firstly, that's the 3 major stair steps, right? 3 major stair steps. So if you're understanding where we are right now in any market, just understand, firstly, have we actually broken out to potentially start a new trend? And if the answer is yes, then if we go to things like, for example, platinum, what has platinum done? So platinum, if I'm utilizing this here, platinum, what has platinum done? Platinum has just broken out to break a new higher high, hasn't it? And now we're getting what? Now we're getting a pullback. Why are we getting a pullback? Because it's based off the energy. I'm going to get the next thing I'm going to talk to you about, right? Which is the energy in these markets. And everything is energy in markets. And one of the biggest mistakes is people getting in when the energy is running out. And then we're just going through this factor here. So looking at the, say, for example, platinum market. If I'm doing the analysis works on every market. And that's the reason why I can trade every market. If I'm looking at platinum here as an example, firstly, we've actually broken out to make a higher high amongst all these highs here. What does that mean? That means now we could be starting a brand new trend. The trend could be now starting in here. Now, if that is true, how many stair steps have we had? We had this quiet period through here, and now we're breaking out to start a new trend. What does it say here? Major trends have 3 phases. Three phases are 3 stair steps, right? So, if I'm looking at, say, for example, platinum as an example in this weekly chart, and I'm zooming right in now. Let me see if I can do this here. What stair step is this on? There hasn't even been a first stair step. Meaning that if you actually look at here, there's no stair step here, right? It's just sideways. This is now what? Broken out. Now we're pulling back. Why is it pulling back? It's pulling back because of what? It's making the stair step. It's because, again, upward trend is what? Market goes up for a bit. Higher lows is upward trend. You probably know that, right? But if you understand that on a deepest level, the market has to drop a little bit to create the higher low. Market go up for a bit, and then it has to come down for a little bit to create the higher low, and then away it goes again, right? So this is why you should never get, for example, the stock market right now. Don't get, oh my goodness, the sky's not falling. It just has to pull back, right? So the trend, to make the trend, we need to actually have a drop for a little bit. What's happening with platinum here? It's dropping. So platinum might drop for a little bit more here and create a stair step. If we did do this, what number stair step would that be? That would be what? That would be number 1. So what does that tell you? That tells you that over the next couple of years, we could see 3 or next, say, 1 to 2 years, we could see another stair step and another stair step. So platinum could be at the start, early phases of a very big bull move over the next couple of years, right? Because then the market goes down and then we go through a big move back up again, and the market goes back down and go back. This is what markets do. And so once you understand that, this is where you never want to get sucked in or into the whole media around market go down, this is so bad. Market go down, you're expecting it to go down. Why is that? Well, if you understand one, see these phases through here. This first phase here is what's called energy phase, right? This is an energy phase. And if the market's going up through here, it's actually what's called a price phase in Gann terms, right? Once we've done a price phase is when the market's moving stronger direction, in a direction. Now, the market can only move in that direction for so long before it runs out of energy. Remember, it's like an energy source. If you were 100 here, right, and you had full of energy right here, 100, and you go to the gym, yes, you're working hard and you're working hard and you're working hard, but there's going to come a point in time where you're going to run out of energy. And then guess what? And then you're going to need some resting, right? You're going to need a resting phase. That's what the market does. It runs out of energy and it needs a little bit of time to rest. And that's where you get either A, this point through here, or B, like what you've seen with gold. And gold is up and then it just goes sideways and then continues up and then goes sideways and then continues up. But it goes through these different, what's called price and time phases. A price phase is when the market's moving, which is using energy. But then after a period of time, that there's going to come a time phase, which means the market needs to reset, it needs to refuel. Now, if you understand these two different phases, this is how the trend is formed. You see this through all markets, right? The market will go up for quite a bit, and then we'll get a pullback through here. And then the market go back up a bit, and we'll get a pullback through here. And so this is where, if you're trying to understand what's going on in say, for example, the stock market right now, or I'll use platinum as an example here once again. If you're trying to understand platinum here, firstly, let's go through these couple of rules. We know what? Every major bull market has 3 major stair steps. Okay? Especially when we haven't been in the bull market for a while. So what does that mean? That means now, when it comes to platinum, we've done what? We've had a very big move up. So what's this one here? This is called what? A price phase through here. And we've had many months of big movement up overall. We've had, now I say overall, right? As you can see, sometimes we get the sideways, but overall we had a very big move up. This is what's called the price phase or the energy using phase. Eventually it will run out. And this is where the worst time to get into a trade, if you see a stock or anything go up for a couple of months, and then you want to get involved with it, it's the worst time. Why? Because on the deepest level, you're going to start to get this here. Why is platinum doing this here now? All platinum's doing this here right now is why? Because it's run out of energy. It needs to refuel. So because we had this big move up here for about 2 or so months, a very big move out of platinum, as an example, it needs to come back down here probably for a month or two to reset, to refuel, right? And then guess what? Then it's probably going to create a major stair step through here somewhere over the next couple of months, right? Or it may do something like this here for a while and get the moving average catching up. And then it's going to create the stair step, and then we're probably then going to go for another big move again. So if you see what I'm doing here, right? I'm trying to teach you about that. This is the way the markets truly operate on the deepest level. And so this is where the worst and best time to get involved with things. And so if I bring up gold as an example, this is where last year, one of the biggest flacks that I got from the gold traders last year, right, is last year, because I'll bring up this chart here. Last year when we started to go pretty parabolic out of gold through here, why has gold been doing what it's been doing here for the last 3 months? Why? Because it's called price and time, right? We had a big move up, and this is where, as we started to move up through here, roughly around this bit here, or roughly around this bit through here, I started giving warning signals that now is the worst time to be looking for a trading opportunity with gold, because I know people look at leveraged and they look at options to get involved with this. And then the market took off and I started seeing people buying call options, and now look what's happened through here. Nothing. What does that mean to call options? You are getting absolutely destroyed right now. Destroyed. In fact, it's probably you probably bought way out of the money, so now you're getting destroyed. And secondly, you probably bought too little time, and now it's probably expired worthless on you. Dear sir, I died on you. So you understand that it's not a matter of if it's going to happen. It's just a matter of when. So if you understand this, and this is where understanding this here. So when are the best times to look for a trade? The best time to look for a trade is after we go through these phases here, these phases here, these phases here, right? Because it's called refilling. Wait for the refueling phase first then we can look for a nice big move to the upside. If I show you my Ethereum trade, why did my Ethereum trade work out so well? Why did I get involved with Ethereum? All right, if you understand that I had my Ethereum trade right here, I got into Ethereum. I'm out of it now because I got stopped out, or profit stop. But why did I get in? I started getting involved with Ethereum down here. Why? Because look at this here. We had what? We had a price phase, a using phase, and then we went sideways for a while, right? What is this here? It's called a time phase. Time phase is when the market's rebuilding or it's re-energizing. It's fueling back up to go for what? To go for another move. So I got in here and then just rode another big move up. Now what is Platinum doing again? It's now, okay, we've just had another big move up from 20 to 32. Now it's sort of flattening out. Now we're doing what? Now we're going through another one of these. And what is this one here? This one here is just one. It's now run out of energy, so it needs to have a bit of a pullback. But what is the pullback overall? The pullback is then probably going to create a high low over the next couple of weeks, right? And then we're probably going to do something like that again. Because then a trend is formed through there. So when you start to analyze these, when you start to really analyze what actually is a trend, and how do I see this in the market, you really start to guide yourself down of making really good decisions because you're not surprised by it. So once again, if you look at the actual, for example, if you look at the stock market here now, right? You look at what's happening here with the NASDAQ. Why did the NASDAQ actually have a really big drop here? Could you have seen this coming? And the answer is yes. You've been listening to what I've been talking about here. Why? Because if you look at this here, what has the NASDAQ done basically since the tariff bottom here? We had a little drop through here, but what is this all through here? This is called what? A very big energy using phase, a price phase. Now, when we've done a very big move on the price phase through there, and we've used a lot of energy, eventually, now we never know when this is exactly going to be, but this is where for the last few weeks, I've been giving warning signs that we're going to get a drop. And if you've been listening to me, the drop has happened. Not because I'm smart, because you understand that the market eventually is going to run out of energy and we're going to go through one of these phases again. And because this phase here was actually quite extended now to the upside, we had 1, 2, probably 3 months or more of upward movement. We're probably going to have a couple of months of pullbacks sideways to refuel again. Just like what? Just like gold did. Look at gold. What did gold do? Gold actually had a very big move up through here, from there to there, right? Which was 3.5 months of upward movement. It had 3.5 months of vertical movement. Now what has it done? It's now had another 3.5 months of sideways movement. Why? Because it needed to rest. It needed to refuel. So if we go to the stock market now, and we see what's happening in the stock market. Again, this is the weekly chart here. What has it done? We just had what? We just had a really big move for the last couple of months. So just like all markets and how they work, after they go for a big move for a while, we're probably going to go through one of these phases here. And then we go for a big move, right? And then we go through one of these phases and so on and so forth. So and when it comes to these phases, as you can see, all this is energy using, energy building, energy using, energy using, energy using. And you go through this here, right? Energy building phase. So the energy building phase, when it comes to trend analysis, is two different things here. When you have, and that's all it really is, right? It's just trend. Market goes up, and then we either go sideways here. If it goes sideways like this, if it's slow, meaning we're not getting any sharp movement on the downside, well then this here typically lasts longer because it's just slowly going sideways, just like gold. But if the market goes up through here and we have a fast correction, typically around the 50% level, well, if it's fast on the downside, it's faster in time. Let me explain this again. So as you can see here, right, look at this here. Why was this one here a lot longer compared to this one here, or even this one here, or even this one here when we had a drop and then we continued the overall big bull market here? Why was this one longer? It was longer because it was slower on the downside. Meaning it was just going sideways. But if we have a very big sharp drop like here, we actually had 4 weeks down and then we started to pick back up. Where here we had about 3 months of sideways movement and then we started to pick back up. So if the market in an upward trend, if the market is slowly going sideways, just like gold, you can then, if it's going to do that, then it's going to be doing that for many months to refuel. But if we have a violent move down first and the trend is still up, it typically lasts shorter before we see another really big move to the upside. Because the faster it goes down, just like here, right? And as you can see here, right, we had these really big sort of, this was a more of a drop to the downside. That was a drop to the downside. And even here, right, that was a big drop to the downside. This one here was more like a sideways movement from here. So we can see what's going on here, right? And so you can see what's happening now. So now, what's going to happen out of the stock market? If it's going to have a very sharp drop, it's probably only going to last a month. Meaning, what have we done here? Remember, right? Energy using, energy building, energy using, energy using, and energy using, energy building. We've had another big energy using phase. Looks like the energy using phase, we've run out of energy. We now need to refuel. So the refueling phase is what? Remember, up energy using. If it's going to go sideways like this, it's going to be a couple of months and then we're going to pick back up. Or if it's going to be a sharp drop, meaning we're going to start to see this for about a month, then it's going to be faster in time. And then probably through September and then October, we're going to start to pick back up really, really quickly. So here, we're either going to do this here. And if we do this here, then probably into September, that's going to happen there. Then we're probably going to see this through September and then October through here. If it's going to be slow, meaning we're going to see this sideways movement from here, then it's going to last long. This is where understanding what's going on in the markets tells you when to get in and also when not to get involved with markets. But also what it tells you is what? And especially when we do this phase here and it lasts sometimes like a year, like if you look at, say, for example, platinum. Why was my platinum trade so successful? Because sometimes the market is not trending, but it's gone through one of those energy phases and it does nothing for a long time. Right? It does nothing for a long time. Whenever you get this here, understanding that it's built energy for many years. So when that happens, it's built a lot of energy. So when it breaks, we end up getting violent moves to the upside. And this is where a lot of traders can get stuck because they may be doing straight trades through here when the market does nothing. But when the market breaks, understanding all this energy that was built, guess what? Now we're releasing it. And this is where, like, I saw someone recently, they were saying with Goldman Sachs, right? Why did Goldman Sachs actually have a very big move to the upside? It's not like surprising, right? Why? Because look at this here. We had all this phase through here was what? This was about, say, we had a first stair step, a couple of stair steps through there. So we had maybe it's about 1 year there. But then we went through what? An energy building phase. But notice this energy building phase lasted actually a lot longer, right? This actually lasted for about 1 to 2 years of doing basically nothing all through here. We had a little pullback and then we went sideways through here. So when we get that nothing for a couple of years, guess what? When we do break out, we typically go for a really big move. A really big move. This is exactly what happened with gold. This is the reason why I was chopping at bits when it comes to gold. When it comes to gold, I knew gold was getting ready for a really big move. Down here. How? Because look at all this here. What has this done? This did nothing here for many years. Once again, if a big market does nothing for many years, it's getting ready for a really big breakout. And when that breakout happens, we typically go for what? Breakout, 1, 2, 3 stair steps, right? So again, this may be the third stair step. It may not be. I'm just and this is where, like, sometimes it can be judgment, meaning like, is that the first? Is that 1, 2, 3, and then we stall here, or is this the sideways movement here, and then we have 1, 2, and then this one here, 3? Well, how I will know this is the third stair step is this. If I go to my GLD price, I'm trying to show you what I'm looking for now is this. If we can see this GLD here, and this is the volume here, right? If the GLD still holds here on the GLD, and we get something like this, and then we get something like that going, like a real big breakout, and we get a volume, but we get a really big volume spike, you know what that tells me? 1, we've now refueled, for many months, right? Because as I said before, look at this here. After this sideways movement, then the move happens. After the sideways movement, then the move happens. So wait for the sideways movement. Wait for the correction. Wait for that drop there, right? And we see this through so much through here. So we can see this through what's called trend analysis. Remember, how is a trend formed? Trend is formed by market either one going up and then dropping. If that happens, it's probably going to be quicker, or going up and then going sideways and then continue up. If that happens, we generally have 1, 2, and then 3 stair steps. Again, it's not 100% set in stone of the 3 stair steps. Sometimes you're going to get 4 and 5 and 6 stair steps, but it's averages, right? You know when you start to get that 3rd and 4th stair step that you may be getting towards the end of this very big bull phase in the markets from there, right? So if I do get this breakout here with a big volume spike, the volume spike and a big breakout is going to tell me that gold's getting ready for another move up. And then this weekly chart here tells us that's the 3rd stair step, and we're likely to see one more move out of gold. And then we're probably likely to see some really significant, then we're likely to see what? Now it's done. And as you can see, right, it's all the same thing, isn't it, right? Look at this here. 1, 2, 3 stair steps. Stair step 1, stair step 2, stair step 3, comes up, 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 up. Then after the 3rd stair step, what happened? Then we did that for a couple of years, and then look at here, for 2 or so years, we did that. So why did it do this for 2 years? Because it went sideways. Remember I said before, because this is a very big bull market overall, right? If you look at the last 10 years, it's a very big bull market. Remember, if the market goes up and then it just starts to go sideways, this is now going to be a lot longer. You need a lot more time here. Why gold is been doing nothing for 3 months, and it's been the worst time to trade, which I haven't been trading because we're in one of those phases. Don't trade this phase because you're going to get crushed, right? Is that there, right? Or, so if we do get that, we're probably going to see, if we do get a very big move, we might see a very big breakout to the upside, then it comes back down through to here, and then we might do something like this here, do nothing for a while. Or either it comes up through here, and then we get a pretty nice correction out of it. A really nice correction, about 50% of the entire move. So this low move here to that high move there, around 50% is where the market could correct. Even down the bottom here, even though we had this sideways movement from here, look at this here. From this low point here to that high point, look what happened. We actually came down the bottom here and we found support at that 50% level. So even though the market does nothing even though the market may go sideways, it can have big ranges going sideways, and then we can start to see new movement to the upside. So when we're looking at any market out here, one, understand what's coming up. It's not a surprise because we go through phases. The market goes through phases. So if the market's been going up for quite some time, like gold was through here, and I was starting to give warning signals that it was the worst time to look for a trade. Because remember, what is a trade? It's a scalping trade, or it's a trade for a couple of months. There's times to get involved with the market, and there's times to step aside and say, I'm not getting involved with this. And when is that? When the market goes up for a bit, uses energy, you're going to get this here. So you know it's coming, right? It's just a matter of when is that going to happen. So for example, the stock market, once again, if we have a look at the stock market right now, Dow Jones is down, right? NASDAQ is down, S&P is down. Why are these all down here? It's very, very, very simple, right? Because look at this very big move to the upside. And once you understand this here, once you understand the dynamics of trend analysis, but the market in this energy field ways, like this energy phase, you start to understand it on the deepest level. So one, again, you don't know when, but the last month up here, you won't be looking for a long opportunity. You won't be looking for longs. Why? Because you know very soon, because we've just done all this price, all this energy using, that eventually we're going to go through an energy building phase, and that's either going to require the market doing nothing for 3 months or 2 months, or we're going to see a fast and hard correction down to around about maybe the 50% level, and that's going to happen over the course of a month or two. But you know that's coming, right? Because if you just look at the way the markets work. So as you can see here, right, this is the reason why these are the simple things that I use to say this is the wrong time to get involved with the markets. or this is the right time to get involved with the markets, right? Now, when you understand this here, the market's dropping here, is the trend over? No. To me, the trend is just getting started. But remember, how is a trend formed? Let's wrap this right back around to what I taught you at the start of this video. How is a trend formed? A trend is formed by the market going up. The market has to go down for a little bit to form the higher low, because higher lows and higher highs is an upward trend. No, John, teach me something new. Well, if you know that, when the market goes up for a bit, it has to come back down. So if we are going down, is it a complete change of trend? Or is it just making the trend? In this case, look at this here. It came down, higher low, up, down, 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 higher low, higher low. You see what I'm saying here, right? And then we're going through here. Now we're going through this. We've had this really extraordinary move to the upside. Now we're dropping to the downside. What is this? All this is probably for the next month, we're probably going to come down to here. And then it's going to form a higher low, and then away we go again. But the market has to drop. One, we've used a lot of energy in this, what's called the energy using phase. Now we need the energy building phase because we've just used a lot of energy. But this energy building phase is what? Overall, making a low and a higher low, and away we go again. This is a low. We're probably going to make a higher low over the next few months, and we're probably likely to make a really big move to the upside. Does it make sense, guys? So this is the reason why I like, when you're looking at markets, see how I've used everything from a deep market perspective, but simple analysis. One, I haven't used economic data and macroeconomics. Two, I'm not even looking at any indicators here at all. I'm just looking at the price. There's so much information from the price itself. And this whole video here was to teach you and coach you and guide you through that process. Right? Now, if you like this sort of what I'm teaching you here and you would like more help, then I have a group called the 1% group. The 1% group, because what we achieve in there, the results that we're achieving is only what 1% of the actual world is actually achieving right now. Where you're with me every day for a couple hours every day, I show you what I'm doing, I'm coaching you and guiding you through this whole process. And every day I'm showing you what's going on in the markets right now. I'm showing you what's happening right now and what's likely to come. You know, when it comes to gold, silver, looking for good opportunities in the markets, coaching you and guiding you for a good couple hours. If you are struggling right now, guys, and this sounds like something that you do need help for the rest of this year, then if you go to Get John's Help, or there should be that second link in the description. If you click on that, go fill out the application form, and you and I personally, you'll be talking to me personally on the phone, and you and I personally will have a good chat to see if you're a good fit for my 1% group. Speak to you soon, guys.